Ladies and gentlemen, good day and welcome to Cipla Limited Q3 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ankit Bhembre from Investor Relations team, Cipla Limited. Thank you, and over to you, Mr. Bhembre.
Thank you, Tanvi. Good evening and a very warm welcome to Cipla's Q3 FY23 earnings call. I'm Ankit Bhembre from the Investor Relations team at Cipla. Let me draw your attention to the fact that on this call, our discussion will include certain forward-looking statements, which are predictions, projections, or other estimates about future events. These estimates reflect management's current expectations of the future performance of the company. Please note that these estimates involve several risks and uncertainties, including the impact of COVID-19, that could cause our actual results to differ materially from what is expressed or implied. Cipla does not undertake any obligation to publicly update any forward-looking statement, whether as a result of new confirmations, future events, or otherwise. With that, I would like to request Ashish to take over.
Thank you, Ankit, and good evening to all of you. I hope you've all gone through the presentation that we've uploaded on our website. So this quarter, we actually witnessed strong performance across all our core businesses with expansion in the profitability despite increase in the R&D investments. The quarterly performance reflects sustained momentum in our branded markets and contribution from our differentiated launches in the US. And this was amidst the challenging macro environment and SAGA missing our internal estimates. While procurement cost remains escalated, but freight cost has improved sequentially, responding to lower rates and improving logistics mix, which is quite reassuring. Coming to the highlights of the quarter, overall, we are pleased to report a quarterly revenue of rupees 5,810 crores. The overall revenue growth for the quarter was at 6% YOY on a reported basis, and a COVID-adjusted basis in comparison to last year, a strong 11% growth. Our One India franchise grew in healthy double digits on an ex-COVID basis, and the North American business reported the highest ever quarterly revenue driven by traction in the differentiated portfolio, including market share expansion in key respiratory and peptide injectable products. Our free cash flow generation and operating efficiency continue to drive our healthy net cash position. Our reported ROIC for the trailing 12 months stood at 19.7%, which was towards the higher end of the range that our long-term target of 17 to 20%. In line with our expectation, EBITDA margins stood at robust 24+% for the quarter on a reported basis. The reported EBITDA growth is 13% YOY and 24% if adjusted for COVID in the base year. Our EBITDA margins for the quarter subsumes the impact of lower than anticipated SAGA performance, a higher inflationary market, and a higher R&D outlay. Higher R&D investments was driven by ongoing clinical trials on a respiratory asset as well as other developmental efforts, including contribution to biosimilar JV. Total R&D expense was higher by 100+ crore versus last year, which is incremental 1.75% of our revenue and part of our profitability business plan. Our reported gross margin after material cost is 65.5% for the quarter, which is 450 basis points above last year's figures, driven by contribution from new launches and overall mix change. Total expenses, which include employee costs and other expenses, stood at 2,398 crores, increased by about 1.4% on sequential basis. Employee costs for the quarter stood at 949 crore, which was flat. The other expenses, which includes R&D, regulatory, quality, manufacturing, and sales promotions, are at 1,450 crores, increased by 3.2% sequentially, driven by, like I said, R&D expense, which was also followed up with judicious promotional and growth-linked investments. Total R&D investment for the quarter are at 363 crore or 6.2% of revenues. The absolute trajectory remains intact with assets progressing into clinical trials and other portfolio developmental effort continuing. We expect our absolute R&D investment to inch up gradually from these levels in the coming quarters. Profit after tax is at 801 crore or at 13.8% of sales. The PAT for the quarter subsumes one-time charge of reversal of deferred tax asset as we revisit our plan for one of our subsidiaries. The adjusted PAT is 876 crore, which is more normalized, or 15.1% of sales. The adjusted growth rate over last year is 20%, and the adjusted ETR would be 27.5%, which is more normalized. As of 31st December 2022, a long-term debt primarily constitutes 720 million ZAR in South Africa and working capital loan of about $49 million in the US. Driven by our relentless focus on cash generation and rigor on cost discipline, we continue to be net cash positive company as of December 2022. To close, we saw robust momentum across portfolio and geographies for the year till now. Our growth levers in the subsequent quarter will include continuing market-beating growth in India across all three categories of prescription, trade, generics, and consumer health. Full year operating profitability in line with our guidance of 21 to 22%. Robust traction in North America portfolio with continued contribution from respiratory and peptides. Incubate and drive growth in stable geographies in international markets with focus on growth core markets and managing the growth in EM markets. And we continue to monitor the geopolitical headwinds that have ebbed but still continues. I would now like to hand over to Umang to talk about the business and operational performance. Thanks.
Thank you, Ashish, and good evening to all of you. Welcome to our call today evening. We are pleased to report another strong quarter of performance, which demonstrates robust commercial execution and continued investments in our portfolio and growth-oriented initiatives. Our Quarter 3 FY23 performance reflects continued momentum across our businesses of One India and US, and has a moderation of the SAGA region coming in lower than our internal estimates. Developmental efforts on delivering a robust future pipeline, investment in capacity creation, and high rigor on compliance, including our de-risking efforts, continue to be our top key focus areas. To accelerate our innovation journey, we also invested in a critical partnership this quarter to support development in therapies, which are future innovation levers for Cipla. During the quarter, we initiated our investment into a JV focus towards building the biosimilar pipeline. We also partnered with Ethris GmbH for the development of mRNA-based therapies, and this fast-tracks Cipla's participation in cutting-edge healthcare solutions to patients. On our journey to build the consumer health franchise in India and South Africa, we continue our growth driven by new launches, category innovation, and actionable consumer insights. Our India consumer franchise grew by 14% year-on-year in INR terms over the last year, after adjusting for the acquisition we made in Quarter 2 FY23. And the global consumer franchise, including South Africa, now stands at close to 9% of overall Cipla revenue for the quarter. We're expecting the India consumer franchise to be nearly 1,100 crore by the end of this year. Coming to detailed updates for the quarter by market, our One India segment The One India core portfolio delivered an 11% year-on-year growth after adjusting for the COVID contribution in last year base. The double-digit growth reflects solid traction in big brands as well as contribution from launches in the focused chronic categories during the year. Our branded prescription business demonstrated double-digit growth in chronic therapies in the core portfolio driven by continued demand. The market-beating growth trajectory continued for the 7th consecutive quarter with the 11% growth significantly higher than the market growth rate. The core revenue growth is underpinned by a healthy mix of price, volume and contribution from new launches. And as per IQVIA December 22, we continue to maintain healthy ranks in market share in key therapies for the quarter. Our growth in respiratory, cardiac and anti-diabetic therapies outperformed the market, and the overall chronic share has expanded by 240 basis points over last year and now stands at 60% of mix for the quarter. We now have more than 21 brands which have revenues greater than 100 crores in the trailing 12 months as compared to 19 in the corresponding previous period as per IQVIA December 22. Our trade generics business continues to witness strong volume traction, strengthening our leadership in the trade generics segment in India. The revenue growth for the quarter reflects a steady order flow from the tier 2 to 6 and rural towns and demand fulfillment across regions, translating into sustained scale-up in our flagship brands. We launched over 10 products and therefore the launch momentum continued in key therapies such as cardiac, anti-diabetic and injectable dosage forms. Our consumer health business continued to deliver consistent growth across anchor and emerging brands, translating into the growth we had mentioned earlier. We now have 4 brands in well-entrenched categories, scaling up over 100 crores in revenue on a trailing 12-month basis. Coming to our US generics and US generics portfolio, the US core formulation sales for the quarter were the highest at 195 million, registering a robust 30% growth on a year-on-year basis. This is the 10th consecutive quarter of growth, demonstrating an increasing share in our respiratory peptides and differentiated launches like lenalidomide. The sales of lenalidomide, incidentally, are marginally lower than the previous quarter. We continue to keep market well supplied and focus on maximizing value from all our new launches. Our peptide franchise continues to track well with lanreotide steadily gaining market share to 14.1% as of November 22 end. We are on track to achieve our 15% guidance in this category. We have also launched leuprolide depot during the quarter, which expands our peptide franchise further. We continue to maintain this launch momentum in the next fiscal and after. Our generic market shares in respiratory products have witnessed expansion in the last 12 months, driven by sustainable supplies and competitive cost position. The total market shares for albuterol and arformoterol stood at 18% and 39% respectively, as per IQVIA weekend December 31st, 2022. On the pipeline front, clinical trials on respiratory assets and filings on complex generics, including peptide injectables, are on track. From a launch perspective, we have responded to the queries on the Advair file and are working closely with the US FDA on the approval. We have been proactively communicating with the FDA on the Goa observations as remediation efforts continue at the site. We continue to focus efforts on de-risking our key assets from the site and will share material updates as the situation evolves. We believe our North America franchise will witness continued growth on the back of new launches. Coming to our international markets business, we continue to drive superior local market growth and navigate a challenging operating environment and forex volatility. While the excluding COVID growth in INR terms is 6% for the quarter, our reported dollar numbers subsume the adverse impact of depreciating local currencies against the US dollar, which is offsetting the healthy double-digit secondary growth we are seeing across our DTM markets. Coming to our SAGA region, as alluded earlier, the South Africa private business is recovering from a reconfiguration of supply and an evolving business mix between private and tender. In secondary terms, their strong demand continues for our South Africa private business, which outperformed the market growth. We continue to maintain our third market position with a market share of 7.7%, and the business did come in lower than our internal estimates this quarter. Our EBITDA margin of over 24% for the quarter tracks well above the 21 to 22% guidance range for the full year. We expect our overall quarter 4 margins to moderate with seasonality. We are encouraged by and committed to maintain the high, strong launch momentum in the coming fiscal and continue investments in developing a robust pipeline across the categories of respiratory, peptide, complex generics, and biosimilars. We are committed to accelerating our return on capital employed, which is currently tracking closer to 20%. Turning now to our outlook, our near-term priorities include accelerating growth in our One India engine, with a sharp focus on building big prescription brands across chronic therapies, driving accessibility to trade generics, as well as our global wellness franchise. Sustainable scale-up of our U.S. formulations business, driven by maximizing contributions from complex launches and maintaining a high serviceability of our product families. Continued execution on branded and generic portfolio, brand building, portfolio interventions, and launch excellence across our DTM and emerging markets. Continued cost focus, calibrated pricing actions, and other interventions to navigate inflationary procurement, freight, and other cost elements, and maintaining a consistent upward ROIC trajectory. And continued rigor on regulatory compliance across manufacturing facilities and implementing globally benchmarked ESG practices. I thank you for your interest in Cipla and your attention, and will request the moderator to open the session for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Saion Mukherjee from Nomura Securities. Please go ahead.
Yeah, thanks. Hi, Umang. On the US, if you can give some color on the growth trajectory. You mentioned Revlimid was lower this quarter, and you expect growth to sort of come back or growth to continue in the quarters ahead. So if you can just give more color, what would drive it, Revlimid and other products? And also on what's the status? Is there a new target action date? Any particular timeline that we can look forward to?
Certainly, Saion. I think let's start with Advair. Our target action date is hopefully in the first week of April. So I think we're quite looking forward to being able to bring the product to the market, and it's the first week of April. I think last quarter we had guided to a base of about 185 to 190 million. Quarter 4 typically, quarter 4 calendar and quarter 3 fiscal typically is a quarter in the US where buying is always a little stronger, and the US has had a pretty strong flu season. So I think some part of that is there in our numbers for quarter 3. But overall, I think from this base of 185 to 190, we could add new launches as they come along, and we certainly have a good pipeline of launches coming up in the next year.
Okay, thanks. And my second question would be, the challenges in South Africa and Sub-Saharan Africa. So you're seeing lower tender business in South Africa, and also what's the concern in other markets in Africa, and how should we think about next quarter and the year ahead in this region?
Yeah, I think the South Africa business issue is more around tender. As well as on private. Private, what's happened is, though we are growing faster than the market, the overall market growth has also shrunk. And I think this is a post-COVID readjustment that's happening in the supply chains there. I think stock levels of customers are falling a bit to accommodate this. And so I think the supply chain is getting reconfigured a bit. So my guess is the worst is probably in our numbers over the last 2 quarters. And I think we begin to see a resumption to the normal from quarter 1 of the next year.
Okay, thank you.
Thank you. The next question is from the line of Kunal Dhamesha from Macquarie Group. Please go ahead.
Hi, thank you for taking my question. So first on the India business, while our reported growth is only 2% and we have said excluding COVID is 11%, can you just give some color on what was selling in the quarter 3 of FY22? Because as far as I remember, we did not have a lot of COVID during that period. So what was the contribution in that particular quarter or something you can help me with?
Naveen or Ashish, do you want to take that?
Yeah, sure. So previous quarter of last year, quarter 3, had COVID sitting there of almost 200 plus crore. So, that I would just wanted to address first. And if you remove that, then the growth is 11% in quarter 3. And this growth has come across actually your chronic therapies as well as in respiratory, where we've grown much faster than the market, which is our core therapy. So both in chronic as well as including that in respiratory, we've actually grown. So that's why you see that reflection in the gross margin improvement as well versus earlier quarters.
Okay, so is it fair to say this 200 crore was more of a product that was supplied to channel, and then whatever COVID-related provisioning we took in quarter 2 was also kind of more or less related to those, because the end market sale of those products were already lower?
Sorry, let me clarify. The 200 crore was the COVID sales in India previous year in quarter 3. That's the readjustment of base that, if you remove that and then look at the figures, then it's a 11% growth. I'm not too sure, there is no, the inventory provisioning that we did on COVID, that was done over quarter 1 and quarter 2 of this year.
And that was our inventory, or that was the inventory which got basically reversed from channel?
No. That was our inventory that we were carrying in anticipation of COVID continuing. And it was across both API and different products as well. The core directly related to COVID treatment, yeah.
Okay, perfect. And second one, just on the adware. So when we say we had queries and we have submitted it, can you just provide some color on when did we submit these queries, and these queries came in as a CRL or information request, and what was the nature of those queries?
Well, I think there was a minor query letter, and so the minor query letter was responded, and the new goal date is, as I mentioned, in the first week of April. Okay.
So typically, if it's the inspection is not required, then the tag date is generally 4 months, which means you would have responded somewhere in November. Is it fair assessment, November or start of December?
I'm not sure we'll give that level of detail, but you could do the math around it. Yes.
Okay, perfect. Thank you.
Thank you.
Thank you. The next question is from the line of Krishnendu Saha from Quantum AMC. Please go ahead.
Yeah, hi. Can you hear me?
Yes.
Hello. Yeah, I just had a couple of questions. Adware, I believe the tag days have been shifted a couple of times. So just trying to understand, is there a chance that what happens if the tag date is shifted again and again? I just want to get a feel of that.
Sorry to interrupt you, sir. Your voice is sounding a little muffled. So if you can speak through the handset mode.
Yeah, I'm speaking from handset itself. Can you hear me now? Hello. Yeah. I'm just wondering that for Adware, the tag date has been shifted a couple of times. So what happens if come April things get through? So I'm just wondering on that. And just on the presentation, I see Brovana getting market share, but with 10-player market, is it still important? Do we make money on that? You could throw some light on that too. And that's it.
No, look, if the FDA continues to have queries, obviously the tag dates will keep shifting, right? So the FDA has to be satisfied with what we've responded to this. All we know is that we had a major and now we have a minor.
I see.
So this is the second cycle of review. So ideally this should hopefully result in, if nothing else goes wrong, this should hopefully, we feel we are closer to an approval. And, Brovana, it is our ambition to keep our share, the market well supplied, and our share high in the respiratory category because it's a higher profitability category. So, whether it's Brovana or it's albuterol or, budesonide, we'd like to maintain high shares on those categories in this market.
And just the last question, you spoke about Goa plant having a couple of important filings from there. Besides Abraxane, how many filings would you like to shift out from there?
No, I think we are only in the process of doing Abraxane and one more. I don't think there is anything significant. Just for your information, the plant has been in that situation just pre-COVID, right?
Yeah. Okay. If I can squeeze the last one, just the 15 million incremental revenue on this maybe on a quarter basis, nothing to look at. But is it largely has Revlimid a huge contribution to that, or it's like you're okay with it?
I'm sorry, are you saying is Revlimid higher in the 195 versus the previous quarter?
Yeah. This is the $15 million incremental revenue. It's Revlimid a fair contribution, or it's
Revlimid is lower than the previous quarter. So Revlimid in this quarter is lower than the previous quarter.
So basically, last three three molecules which we have outlined, those are the ones which have gained the market share. That is what's giving you the fillip of $195 million for the quarter.
That is correct.
Right. Thank you. Thank you for your time. Thank you. That's clear. Thank you.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Good evening. Just trying to understand Revlimid better. So you mentioned it is lower contribution, but going forward, we see NATCO coming in March again with higher share. How do we see is this going to ramp up in the upcoming quarters for the next few quarters, or how should we think about it?
I'm not sure that I still think that the market, at least for the next 1 to 2 years, is still going to be a market where the generics would, all generics added together may not possibly be able to satisfy the full demand of Revlimid as it exists today in the market. So I'm not sure that there should be intense competition in this segment, despite people getting higher allocations or entering into the market.
Okay. And with our market share increasing with the time gap, it's fair to say that there could be ramp up from the current levels.
I can't comment on that. I cannot comment on that because that is subject to that is part of an agreement with a branded company. I can't comment on that right now.
Okay, fair enough. And in terms of understanding the US run rate, you mentioned barring the flu season, Lanreotide as well as another peptide product have contributed, but you seem to be cautioning for Q4, and Q4 typically is a softer in terms of margins also. But with this kind of US run rate, would it be fair to see margin expansion unlike previous 4Qs?
I think we are hoping to be higher than the previous fourth quarters of the previous year. That for sure. But it's not going to come at the margin profile similar to this quarter.
Okay. And lastly, on the gross margin side, we should assume the sales mix to be a major contributor. As you said, Revlimid is lower. So since tender business is lower, that's the key contributor for the gross margin improvement. Is that right understanding?
I think maybe Ashish, you can take this one.
Yeah. So it's a combination of 2-3 factors out here. Product mix is one. So there is more respiratory, there is more products that are higher margin. Tender is also playing a role out here. There is also forex element that helps us in the margin in this quarter versus the previous quarter. So there are many factors that play a role. There was a provisioning that we took for COVID inventory in the previous quarter, which is obviously which is absent in this quarter. So it's combination of all these factors which has led to better gross margin.
Okay, perfect. Great. Thanks and all the best.
Thank you. The next question is from the line of Shubham Goel from Motilal Oswal. Please go ahead.
Hello.
Yes, we can hear you. Please go ahead.
Yeah, actually, I just wanted to ask that going forward, considering all the JVs and stuff that is planned, so what is like the kind of projection that you have for like the next 2 or 3 years?
Projections for?
Like the future, like a few months from now, or a few years from now.
No, but in terms of R&D or in terms of what?
In terms of business, like how do you expect the business to be growing?
Oh, so I think on India, we do expect to have a growth higher than the market, like we've had in the past 7 to 8 quarters. In the US, it is going to respond to how the product launches come. And we have we'd like to believe that between respiratory products, etc., we do have a good pipeline. And on the emerging side, I mean, South Africa will readjust from, the current quarter, as we've signaled, it should be back. In the quarter 1 of next fiscal, it should be back. So I think it's, we see a reasonable growth going forward.
Okay.
Shubham, do you have any further questions?
No.
Thank you. The next question is from the line of Sriram Rathi from BNP Paribas. Please go ahead.
Yeah, thanks for the opportunity. Just one question on the US sales. I mean, earlier when we were around $500 million sales, we were guiding for like $800 to $900 million, and we are already closer to that. And I think you also mentioned that beyond $800 $900 million, it becomes a challenge to grow in the US market. So how should we look at this market now for us? I mean, from a $95 million, let's say in the next 2 to 3 years. I mean, what will be the key drivers on this space? Thank you.
We have a good line of sight, at least to the to the level of numbers that you're looking at. We are currently, somewhere around the 700-ish mark, on a 12-month basis. So, from here, we think that we can get to the, to the 900 million mark over a period of time. And I think from there, we are actively building the pipeline to see what best we can do. There is evidence now, at least in the market, that companies can grow higher than that value. So we are also investing in pipeline. We've also got our biosimilars engine firing, more respiratory product trials happening. So, we're very quite optimistic about the US market, and we can see growth in this market even beyond the, 850 to 900 million mark.
Okay, got it. That's helpful. And another question on margins. I mean, we have been guiding for 21 to 22% EBITDA margin. Now, considering the fact that we are already around 22% plus, and probably the share of revenue will keep on increasing in the next 2 years. I mean, how should we look at the margin profile over the next couple of years?
Yeah, I mean, our intention is to grow margins year on year. I think the pace of growth, as we've said earlier, that since we've reached the level of, the 21 to 22% now, I think the objective is also to reinvest back in the business and to try and see if we can increase the margin profile further from here, because we'd like to invest back to grow business faster, which is the direction we are on.
Okay, got it. That's helpful. Thank you. Thank you so much.
Thank you. The next question is from the line of Damayanti Kerai from HSBC Securities. Please go ahead.
Hi, thank you for the opportunity. Umang, my first question is on Advair. So you did that in first week of April. Do you see like FDA reinspection will be required for the facility?
Well, according to us, the PAI inspection is over, right? Now, if the FDA does have to audit Indore in the interim, that's a different issue. But the PAI inspection for Advair is over.
Okay, so up to FDA, like they might need to reinspect the plant before the final approval comes in. That cannot be ruled out, right?
It can't be ruled out, but it's not at least the correspondence we have from them, this was not a precondition.
Okay, that's clear. My second question is on Abraxane. Have you got any update to share after the Goa update in previous month?
No update. I think, as we said, we are also trying to de-risk the product, so we do not have a new update.
So, in most cases, we assume this could be a potential second half FY24 launch if everything goes per the plan.
Yes, towards the later half of the second half of FY24, that's the correct assumption.
Okay, and my last question is on the Saga and SGS segment. I think you obviously mentioned some of the issues there, but this segment has been very volatile over, I'll say, some time now. So how should we see sales or like business performance moving ahead in coming quarters?
You see, all the markets which have economies which are responding to the current global situation, whether it's in markets in the Middle East, to some extent Europe, as well as South Africa, the economies in Europe as well as in South Africa, some readjustment happens because of dollar, and especially if the market is a self-pay market, it also responds to the economic situation. So if you look at South Africa, market growth has reduced, right, over the base of the previous year. And obviously, the global situation does not help. However, our business has always outgrown the market growth, right? And I think that will continue going forward. But we have some issues in terms of just the market readjusting the amount of supply it needs for its growth. And I think that's currently happening. As I mentioned, I think the worst is over. From a growth perspective over the last 2.5 quarters. And from quarter one of next year, we expect things to be, and when I say quarter one of next year, it's quarter one of next fiscal, we expect things to be, pretty robust again.
Yeah, and just to add on Saga specifically, if you see how the business is transitioning into lower tender and higher private. So in FY19 or so, we used to be probably about 30% tender, 70% private, which is now 80-20 kind of a split in favor of private. And that's also supported by new introductions that we're doing. I think the volatility has come due to the supply issue that we talked about, which hopefully from next year onwards, we should see it going away. And the advantage of growing faster than the market, though market is actually, but the fact that we are growing faster than the market, those benefits should be more visible, over next couple of years.
That's helpful. And my last question, if I may, Umang, can you comment on the pricing scenario for albuterol market? Has it changed meaningfully compared to previous quarter?
No meaningful change to the previous quarter.
So prices are largely stable, right?
Yeah, in the sense that the prices adjust during the year. There's no doubt about it, right? But I think since your question was specific to versus the last quarter, no.
Okay, thank you. I'll get back in the queue.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, thank you for this opportunity. So, congratulations for the good set of numbers. Two questions. First is the point of care device that you have introduced. So, in fact, we have been seeing kind of a better performance driven by the One India policy or One India approach in the domestic formulation side. Now, this device introduction, do you consider this is a complementing factor other than the other aspect, or it is just a one-off kind of introduction? That is how we should see it.
Ashish, can you take that?
Sure. I think, diagnostic and devices, while it is nascent, it continues to be one of our legs in our strategy. Okay, going forward, I think it can grow into a business as well. So that's how we are looking at it. It's at a very nascent stage as we speak, but we want to improve our touch point with patients and actually service the patients from every possible ways, right? And therefore, devices and diagnostics are some of the legs that we have identified as, future legs for ourselves.
Okay. Second question is on the, let's say, this gross margin improvement only. So you have clarified about it, obviously, but if I see that if it is a kind of a normalized kind of a gross margin situation, then I think this seems to be one of the best gross margins over last 4-5 years, excluding the phase of this COVID. So how sustainable this this gross margin scenario for Cipla, and how should we see really for the future? Because going ahead, the product mix is likely to improve towards the complex product more and more. So whether it is a kind of permanent phenomenon or it is just a one-off quarter specific scenario.
See, I think this quarter you had the benefit of seasonality, and this is probably one of the best quarters of the year as well. I think if you see a little bit long term, you've seen that we've got partnered products, etc. as well, and that is the idea of having partnered products is to actually go to the market much faster and tap the potential that exists and share the capability. So, and that, of course, in partner products, there will be lower margins, right? So, it's fair to say that we'll be able to maintain the margin. To grow the margin, it depends on how many launches we are able to successfully do in the US.
Okay. Just one, sir, on the mRNA means JV or the partial acquisition of the A3. So it looks like that's an interesting platform technology that you are getting access to, and because of that, possibly you can have multiple product opportunity using that technology platform, and hence possibly complement your lung leadership program. So if you can elaborate a bit on the intent front relating to A3 mRNA project.
Yeah, so I think in terms of you've probably answered the question yourself. I think in terms of technology, it is something that goes along with our core strength of respiratory and lung leadership. So this is an inhaled technology, and therefore the whole idea is that if there is an existing capability that exists, we have invested in that. And the whole idea would be to actually commercialize that in our core markets through partnership.
Okay, but it is a futuristic project. That is how one should see.
Absolutely. Yeah.
Okay. Thank you, sir.
Thank you. The next question is from the line of Parvati from Course 5i. Please go ahead.
Hello, am I audible?
Yes.
Yeah, thanks for taking my question. Just wanted to know, do you have any plans to file generic Spiriva in the US?
We are not going to comment on that. We're not going to comment on that, please.
Okay. Yeah, and one more question. Could you give some clarity on the respiratory asset for which the clinical trials are ongoing? Could you reveal the product?
Well, we're not going to reveal it, but yes, it's a product like Advair.
Okay. Yeah. Thank you.
Thank you. The next question is from the line of Neha Manpuria from Bank of America. Please go ahead.
Yeah, thanks for taking my question. My first question is on the R&D. Actually, you did mention that R&D would inch up gradually, But just wanted to get a sense on the guidance for next year. Would it be in the historical range that we've given, or would it be much higher than that given the respiratory trials?
No, I think it will remain at what guidance we've been giving, which is about 6 to 7%, because the focus has always been complex R&D, and that's what we are focused. I think what I meant also was that this quarter there were certain clinical trials due to which the expenses had also gone up. So just keeping that in mind, there was some increase.
Understood. In which case, given the commentary on the strong growth in the US that we are expecting, if I look at it as a percentage of sales, we're not talking about too much, a very large increase in R&D, probably 150 basis points. Should we not be seeing a material increase in, EBITDA margins versus what we've been reporting for the last 2 or 3 quarters? Any reason for, us to say, I understand we're reinvesting back into the business, but, should there not be a step up in margins as we see US grow from current levels?
Yeah, I think overall, if you look at EBITDA margin guidance that we've been giving, it's a mix of many things, right? And in the US, there is price erosion that you constantly witness, and you make it up with new launches. So on an overall basis, we expect the margins to be maintained. I think that's what the endeavor is. And then, like I said, the new launches are both self as well as in partnership. So you have to look at margins of both and in combination to arrive at overall US margin.
Okay, so when you see margins to be maintained, it's maintained at what we've been reporting.
Yes.
Okay. And second question, Umang, just a clarification on lanreotide. We're already, close to the market share, target that we've been indicating. Is there scope to improve market share further in the next year, or are we constrained by, certain raw material supplies, etc.? And, from a revenue perspective, was this product in line with what we'd initially expected at launch?
Yes, I think this is in the current trajectory is in line with our expectations. And, market share could expand from here, but, these products are not like generic where the share expands significantly in 1 quarter. So we see some expansion, but, it is completely in line with our expectation.
Understood. Thank you so much.
Thank you. The next question is from the line of Bino Pathiparampil from InCred Capital. Please go ahead.
Hi, good afternoon and congrats on a great set of numbers. Umang, a follow-up on Revlimid. If I remove Revlimid revenues from this 3Q US revenue number, would the US revenue number be higher than the first quarter level when there was no Revlimid?
Would it be, sorry, repeat your question. If you remove Revlimid from this quarter numbers,
would the US revenue be higher than 1Q of this year where there was no Revlimid?
Of course.
Okay. Second, coming to Abraxane, Apotex had launched. After that, I believe HBT Labs has got an approval. Have they entered the market, and any other competitive scenario that's changing while you shift the manufacturing?
I'm not sure if, at least till the last update that was given to me, we believe that HBT had not entered the market. However, I think there is some pre-existing relationship that 2 or 3 market players have by virtue of an AG agreement. So we are not sure whether the AG stocks are completely liquidated or not. So I'm limited by my understanding of that right now.
Understood. And lastly, on leuprolide, apart from the AbbVie product, there are a couple of other products in the market, one from Tolmar and one from Accord as well. So would you be competing against all of these and possibly taking share from all of these, or is it only from AbbVie?
Binu, I think the market pulls from each other. Exact amount of how much it would pull from which particular type, we are not aware right now.
Okay, but practically this is all the same product, right?
Well, technically they are not, but because even I think in administering the products look different and probably feel different too. So I think it's I think they will pull from each other, but I'm not sure exactly to what proportion.
Understood. But your primary pull would be from AbbVie, or would it be spread around?
Well, we do have a target to go after, but at this point, we're just being as open as possible in terms of where we could get share.
Okay, great. Thank you. Thank you very much.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Hi, thank you, and good evening, everyone. Umang, is it possible for you to give us a broad guidelines over the next 15 months? What could be the complex launches in the US? I mean, we know there's Advair, there is potentially Abraxane. I think you mentioned one peptide product by September, if I'm not wrong. So anything else that you want to add to this?
Sameer, there are a few other products, but at this point, we're not sure we'd like to provide that visibility, and not because of any other reason, but because we're just trying to figure out what the likely dates for these products would be based on most recent, correspondence with the FDA.
Okay. So they are more complex other than these three. That's what you're saying. This timing is unfair.
But at the same time, let me also say that these three would probably be the larger ones in the kitty.
Okay, no, that's very helpful. The second question is on Revlimid. If the market does remain undersupplied by generics over the next couple of years, then is there any risk to pricing, or the same pricing is going to hold?
Well, Sameer, I think that every year on generics, there's always a little bit of a pricing drag, right? Having said that, I'm not sure in Revlimid we may necessarily see a huge drag as more people enter, like we've seen with regular generic classes. There would be, I don't think it would be unfair to expect that there would be some amount of erosion, but I don't think it's going to behave like a regular generic product at all.
Okay, great. And for leuprolide, 22.5 mg, I think 3-month depot, you are probably the only generic. So did it contribute materially to 3Q number, and the second is, how would the market share ramp up be, more or less like lanreotide, or different, or much faster?
I think the lanreotide version would be something similar, give or take a quarter here or there. I think that would be probably a curve that would be a little likely. Again, we have to keep in mind that lanreotide was the only available product, whereas for the others, we have 2 or 3 brands in the market right now on the leuprolide side. Having said that, I think the trajectory should be slower than a regular generic, just probably like a lanreotide.
Okay, great. One final question, Umar Sahib, is on Ethris. So for 15 million euros, what's the sort of percentage stake you have taken, if you can share? And I saw the pipeline, it looks like all of them are discovery stage, preclinical type. So it looks like even the science is sort of untested, unverified. So how are you thinking about taking this forward?
Yeah, I think that the platform they have developed, the area that they are researching is the delivery through an inhaled route, right? Which appeals to us significantly. Now, having said that, there's always risk involved in discovery of ops. They have a couple of products which we believe could move faster in their pipeline, and I think it is our belief that their technology is pretty sound in terms of what we've seen and analyzed so far. So I think we have about, I don't know if we have been public with the stake, Ashish, have we been?
No, we've not been public.
Yeah. Okay. So it's I would say it's a minority stake, Samir. You could pencil that in. And the objective is to have the ability to bring these products in India and introduce them in India as and when they're ready.
Okay. Thank you very much.
Thank you. The next question is from the line of Nikhil Mathur from HDFC Mutual Fund. Please go ahead.
Yeah, hi. Good evening. My question is on the overall One India business. Can you share the overall One India business? What is the share from chronic and acute split in 9 months this fiscal? And if the growth overall is 12% in One India, what is the chronic and acute growth that the company is tracking in 9 months FY23?
So the split of acute and chronic. So chronic is about 60%, and this is on the prescription side that I'm talking about. The balance is chronic is 60 and balance is acute.
And what are the growth levels you're tracking in both chronic and acute?
Growth levels
in 9 months FY23.
So about 6% roughly. That's that kind of a number for anti-infectives.
Okay, so in the prescription business, if I'm getting this correctly, 60% is chronic, 40% is acute. 40% acute business has grown by 6%.
Yeah, and your chronic is all double digit, right? 10, 11%, and like respiratory can be somewhere around 17% is what we showed in the on a slide as well.
Right. So my question is tied to let's say the respiratory segment. It seems that this particular year the growth is pretty strong. And in anti-infective also, Cipla might be at 6%, but when we see the data of some other companies, ex-COVID, the growth is looking pretty strong this particular fiscal year. Pre-COVID, there were some challenges on the acute side on growth front. So just wanted to understand, is there some sort of a risk building up, let's say in FY24 of an adverse base in India because acute and specifically respiratory for Cipla is doing pretty well this year?
I'm not sure that I would. I think the risk. So let's try and understand your question. Is your question on whether there is excess stocking in the market? I don't think there is, considering just how the India system operates and our review of secondary data. Now, if your question is, will the incidence of anti-infective and respiratory drop in the next year? I'm not sure we can predict that. It's very seasonal and it's linked to your pathogens and disease favor. I'm not sure we can predict that actually today.
Sure. And one more question on the margin front. I think there was a comment made on some cost also easing, whether it's raw material or packing materials. Freight costs have eased sequentially in this quarter. So on the journey of cost normalization across these three heads, which is raw material, packing, and freight, where are we in terms of normalization? Let's say on a scale of 0 to 100. Are we close to reaching the peak normalization that was to be done, or we're still far away from what the normalized cost should be across these three heads?
Sure. No, see, I think it's a constant endeavor for us to keep bringing down the freight cost, which happens there are two levers. One, of course, the freight cost, the rates itself has come down and moderated. And the second is that you change the mix, right? The air and sea mix. And for that requires you to do your planning of supply chain very accurately so that you can use the sea route. So it's a constant endeavor. I think there is still room for us to improve further because we still have a mix, and that will continue as a journey. We're reaching a point where I think there will be some optimization that should happen.
And so, what about API prices and raw material costs? What's the outlook on this?
On the procurement cost, also we've seen some stabilization, but some of it's difficult to say because China is still evolving from the supply situation. So can't say for sure what the next year contracts would be. But the cost increase that we saw earlier in the previous year, that seems to be ebbing.
Okay, got it. Sure, sir. Thanks a lot.
Thank you. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Hi. Thanks for taking my question. Umang, you mentioned about the biosimilar initiatives that you've undertaken during the year. Can you just highlight if there's any more incremental developments on that account?
We have two products that are in development. One more that's been selected, which will be going into development. We're also now steadily ramping up the team. So Chemwell is the partner, and they're doing the manufacturing. So I think we're pretty satisfied. Most of the programs are in line with our internal targets.
And what would be the timelines for these regulated and unreg market launches, non-reg market launches for these products?
Non-reg could happen in the next 3 to 4 years because I think the patent estate for some of these would be 4 years out. Reg markets would still be 5, 6 years out.
And secondly, on in terms of the significant cash that we have and the cash generation that's happening in the business, I mean, what are your thoughts on utilization of these proceeds or this cash, this cash which is there in the balance sheet, given the fact that keep accruing cash, I presume the way business is going at this point of time?
No, but I think we have also signaled we are open to acquisitions. So we will look at the right acquisitions. Of course, India is a market we are very interested in, as well as the capex program could go up a little bit in the next 1 to 2 years. And then, of course, the board would always discuss the ability of the company to pay some cash back to shareholders with higher dividends or other manners. So effectively, this is only our second year of surplus cash. It's not that we have been having surplus cash for a long period of time.
Right. I mean, on M&A, India, you rightly mentioned, but beyond India, what would be our strategic objectives from M&A perspective?
So we keep looking at opportunities across the globe in the international market, as well as selectively in the US as well. I think it's to fill the gaps that we have rather than anything else. But in terms of if I have a dollar, then the proportion allocation to India would be higher because it continues to be a growth market, and we are keen to grow share out there.
Okay, thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to management for closing comments.
Thank you, Tanvi. Thanks everyone for joining our earnings call. If you have any other follow-on queries, please do reach out to investors.relations@cipla.com. Thanks and have a good evening.
Thank you very much. On behalf of Cipla Limited, that concludes this conference. Thank you for joining us, and you may